Why trade for a prop firm, how to pick the right prop firm for you, and how to build a stable career in trading. Yes, what's up everyone? So today I want to talk about prop firms, and lately prop firms have become very popular. There are a lot of online prop firms out there. And today I want to discuss how you can pick the right prop firm, what to look out for, and how you can actually build a career with these prop firms. So let's get started right away. First, the risk disclaimer. All right, table of contents. I'm going to start by talking about what prop firms are, basic information. Then I'm going to talk about the benefits of prop firms, then how to pick the right prop firm, a preview of the next video because it's going to be quite an interesting one, and then a conclusion at the end. So first of all, what are prop firms? Prop firms are proprietary trading firms. Back in the day, these kind of firms were only physical, so they had an office. And then after some time, most of these firms disappeared for quite some time. And now since around last year, maybe the year before that, you are really seeing that a lot of prop firms are starting online. And it makes it easier for traders, for retail traders, to get access to more capital. So in my mind, to me, this is a great opportunity for traders. So you can still work from home, experience the freedom you have, but you get the capital from a firm to potentially become a better trader, make more money. So when you are trading for a prop firm, you're basically trading their capital. But before you can trade their capital, you have to prove yourself worthy of the capital. And you do that usually by completing a test, an evaluation. I know that for a lot of physical prop firms, you also have some math tests sometimes. Sometimes you have to bring in a record of your trading. Sometimes you want to see backtest results and how you approach trading, what kind of personality you have, etc. But with these online prop firms, usually you have to pass some kind of evaluation period to get funded by a prop firm. Now, what are the benefits of prop firms? First of all, this is the most obvious one. You get more capital. And lack of capital is usually what causes a lot of retail traders to never make it. And why is that? Because if you don't have enough capital, you should always focus on the percentages. And if you don't have enough capital, let's say if you trade $1,000 account and you make 10% a year, which is pretty decent. It's not really great. Let's say you make 20% a year. That's a decent return as a trader. And if you can do that consistently, you can really build a great career. But if you're making 20% on $1,000 account, that's $200. Now you're not going to be able to live off of that. So because of that, everyone knows you should focus on the percentages, but if you trade such a small account, you're not going to, because the percentages are not going to pay your bills. The money is. So usually people will be starting to risk more in order to make more money. But when risking more, the risk of ruin goes up, the drawdowns increase, and once they hit the drawdown, they get all kinds of psychological issues, make mistakes, and then blow up the account. But when in reality, they might be great traders, but they're just risking too much because they're undercapitalized. Another point is when you don't have enough capital, is that you cannot risk efficiently. Let's say you want to risk 2% a trade, but you trade a small account, then you have to round up the lot sizes you are going to use. And if you round it up, if the differences are quite massive between what you should risk and how much you round up to, you can basically be risking more on your losing trades and less on your winning trades based on luck or based on bad luck. And that means that if you risk more on your losing trades, which you don't know beforehand, you increase the size of your losers and you decrease the size of your winners, which cuts in your performance. And this can be very severely back in the day, I used to trade a smaller account, and I was losing money on it. But when I checked the R, so the average or the total return I made in that year, return on risk, so not the percentage of the money, but the return on risk, I was actually up. I made a decent R, but I was down some money just because I couldn't position size correctly, and because of bad luck, I was risking more on losing trades. So that's also a reason why undercapitalization is really bad for your trading performance. So a prop firm can give you access to more capital, which fixes these two problems. Next to that, you're also not risking your own capital, which might be beneficial for some of you because you're not, you don't have the feeling that you're losing that you can potentially use your own money. So that can be a bit of a relief and make it easier for you to follow your plan. Point 3 is forced discipline. So these prop firms usually have some kind of rules you need to follow. They have rules about risk management, about when you can enter the market, how much drawdown you're allowed, and it really forces you to stick to your plan and to do your homework and to be disciplined. And some people need this. This might actually improve your trading if you're trading for a prop firm. And point 4 is you can build a real career. So most of these firms have scaling programs, which means that you can get access to more capital if you're trading well. And that can really, you can really get access to a lot of capital, sometimes even millions, and then you can really build a solid career. So those are the benefits of prop firms, but how can you actually pick the right prop firm? First of all, you need to know your edge and your style of trading. Now, I am a swing trader, which means the most popular or one of the most popular prop firms out there right now is FTMO. Most people know it, but FTMO is really focused on day traders. You have 30 days to pass the first evaluation period, 30 days. Now, I'm a swing trader. I take around 5 to 10 trades a month, which is way too less. My win rate is around 65%. But let's say I hit a losing streak and I lose 5, 6 trades in a row, which can easily happen with such a high win rate. Then I'm already down and I won't be able to pass. So you need to know your style, you need to know your edge, so your win rate, your statistics, everything. And then you can analyze different prop firms, look at their rules and see if they fit with your trading. If you are a swing trader, you want to focus on programs that don't have a time restriction that you have to pass within a certain period of time. You basically want to look for a subscription-based prop firm where you have to pay a certain amount per month, but there's no limit on time. Or you want to trade for a firm that has maybe a year to pass the evaluation. That's the best option if you swing trade. If you're day trading, you can go for the firms with the time restrictions. Also, if you're swing trading like I do, I hold my trades over the weekend, and most of these firms don't allow you to hold your trades over the weekend. So that's also something you need to keep an eye out. So yeah, the next point is look at scaling programs. And some prop firms have very awesome scaling programs, which means once you hit a certain percentage, they double the money you can trade. And if you do that consistently, you can really build a nice career. So that's also something you want to look out for. And also look for a firm with a good reputation. That's very important. You want to build a long-term career, not just get some quick money out of it. So look at the ones with a great reputation and stick with those. Now, the last point might be the most important point, which is don't focus on the challenge. And most people focus on the fucking challenge and they pass the challenge and then next month they lose the account. Why is that? Because they only focus on the challenge. They want to pass the challenge. Once they pass the challenge, they think they made it, which is obviously not the case because that's only step 1. Step 2 is to get the account, to keep the account and to make consistent money. So if you are going to trade for a prop firm, find one that fits with your trading and then focus on consistency. Focus on keeping the account. Don't focus on the challenge. You should trade the challenge the exact same way as you would be trading once you're passing, once you've passed the challenge and once you've got an account. You don't need to be focusing on a challenge, because research shows that over 90% of the people that pass a challenge lose the account within 2 or 3 months. Over 90%. So these guys are all happy. Oh, I passed the challenge. Let's post a screenshot, fund it for FTMO. Next month they lose the account and you don't hear anything from them again, because they know they suck as a trader and they know they did something wrong. So please only apply to a firm if you are consistent. Don't focus on the challenge, focus on consistency and find a firm that fits with you. Now I want to give you a bit of a preview about next video, because I want to talk about BluFX. BluFX is a prop firm in London with a very good reputation. And I basically have a partnership with BluFX. And now you might be thinking, oh, he's going to sell me something. That's not necessarily the case. I have a partnership with BluFX, which means in the next slide, I'm going to do an in-depth review about them. But basically, you can get a discount. So if you're interested in BluFX and you watch next week's video, you can find a discount. Plus, you can get easier rules to pass their program. So you pay less and it's easier for you to get funded. So if that's something you're interested in, if BluFX is a firm that you like, please watch next week's video, because I will be doing an in-depth review about them and I will be talking more about this discount offer and this partnership. So to conclude this session, please subscribe to this to my channel, and that way you will be notified once that video is up. And if you are going to apply, if you want more capital, do your research, know what style of trading you are using and find a firm that fits with that style. Find a broker or a firm, I mean, with a great reputation, and focus on that. Focus on consistency, don't focus on the challenge. And that's the message in today's video. So please subscribe, leave a comment. If you have any questions, you can always ask them via the comment section, via my website. And I'll speak to you guys in the next video.